Question number 7 is in the name of the Honourable David Parker. Phil Twyford.
On behalf of my colleague David Parker, to the Minister of Finance, was he advised prior to signing the Reserve Bank Memorandum of Understanding that LVR restrictions would disproportionately affect first home buyers and that regional exemptions would not apply?
Honourable Bill English.
Mr Speaker, in answer to the member's question, no, because the discussion prior to signing the memorandum was not a discussion of that nature. The Memorandum of Understanding gives effect to the macro-prudential tools for the purposes of financial stability. It covers the 4 tools that were discussed: adjustments to core funding ratios, the counter-cyclical capital buffer, adjustments to sectoral capital requirements, and quantitative restrictions on the share of high loan-to-value loans on residential property. As part of the consultation process required by the memorandum when a tool is being considered for use by the bank, the government was subsequently advised of a range of effects of LVR restrictions.
Supplementary, Mr Speaker.
Supplementary question, Phil Twyford.
Why, given that the Reserve Bank said last week that if it was to implement exemptions for new builds in loan-to-value ratio limits, it could turn to the Memorandum of Understanding that it has with the government? Why, in that case, did he not ask the Reserve Bank or Treasury to conduct analysis on the effect of LVRs on young first home buyers or the regions before negotiating and signing off the Memorandum of Understanding?
Honourable Bill English.
Mr Speaker, because that wasn't the purpose of the memorandum. The purpose of it was to do what actually the opposition, I think, were arguing for a couple of years ago, and that is to provide a framework for the use of macro-prudential tools. The member still misrepresents or misunderstands the role of the Reserve Bank. Regardless of what advice we took, and we did take advice on the impact of LVR restrictions, the decision maker is the Governor of the Reserve Bank.
Supplementary, Mr.
Supplementary
Speaker.
question, Phil Twyford.
Does he agree that the fact that the Reserve Bank Governor is now suggesting that new builds might be exempted from LVRs shows that the LVR policy was rushed out, untested, because his government had done nothing on housing in 5 years?
Honourable Bill English.
Mr Speaker, no, and again it shows the member isn't really watching his portfolio area. The government initiated the first Productivity Commission inquiry into housing affordability, which produced advice that we should concentrate on getting a faster supply of more houses on the ground more quickly. And I would note in recent reports from Australia that in a country that has a capital gains tax, no LVR restrictions and a restriction on foreign buyers, they now have record low participation by first home buyers in their market, as reported in the last couple of days. And that tells us that first home buyers in Australia and New Zealand both face the same challenges, and that is the houses are just too expensive relative to their incomes, and we need to free up the supply of housing to get those ratios down.
Supplementary, Mr Speaker.
Supplementary question, Phil Twyford.
Doesn't it speak volumes that his government's 5 years of inaction on housing has brought about LVR restrictions, a policy which disproportionately impacts on first home buyers, the young and the regions, while he opposes a capital gains tax which disproportionately affects rich multi-million-dollar property speculators?
Honourable Bill English.
Mr Speaker, no. The government is actually very proud of the action it's taken on housing because of the contrast to the housing market it inherited, where first mortgage rates were 10%, they're currently just over 5%, where house prices had doubled, and where we had become one of the least affordable housing markets in the developed world. That's what happened under the Labor Party, and we are very pleased to have the opportunity to fix those problems.
Kanwal Singh Bakshi, supplementary question.
Supplementary question to the Minister and asks, what steps has the government taken to support the first home buyers?
Honourable Bill English.
Well, Mr Speaker, the government has moved to ensure that within the restrictions the Reserve Bank put in place, first home buyers will get more choices. The government has increased the number of welcome home loans, which means there are an additional 1,600 first home buyers will get priority from banks, and the government changed the criteria for accessing the subsidy from KiwiSaver, which means that first home buyers have the opportunity to pull together a bigger deposit. In the longer term, we have moved to cut red tape through the RMA and local government reforms, move to lower the costs of construction, increase land availability and sign up accords, particularly with the council of our largest market, Auckland, who have agreed with the government that we should aim for 39,000 new houses in the market over the next 3 years. And just a few weeks ago, the Housing Minister announced the first batch of special housing areas, bringing 6,000 new homes to the Auckland market.
Question number 8, Gareth Hughes.
Thank you, Mr Speaker. My question is to the Minister of Energy and Resources.